Sometimes reality is better than fiction. And this story is both the funniest thing I've seen happen on Wall Street in years and one of the best examples I've ever seen of regular traders getting the best of Wall Street billionaires. Now, unless you've been living under a rock, you've heard about GameStop recently, ticker symbol GME. Here's the chart. As you can see, this stock has gone absolutely insane, up about 1,500%, for years. This was a stock that traded down anywhere between $4 and maybe $10, $15. And it recently got a little bit of boost from both people gaming more during the pandemic and the launch of the PS5, et cetera, et cetera. Well, famed short seller, the firm Citron Research, came out with a report calling for this stock to be shorted, saying they took a short position themselves. Now, these are pretty influential guys. Normally, when they do this, a stock tanks, but that's not happened with GME. In fact, the stock went the other way. The reason? A bunch of kids with Robinhood accounts and a Reddit subforum known as WallStreetBets. Here's the website, reddit.com/r/WallStreetBets. Now, this started really as mostly a joke. It's kids we're talking 16, 18, 22 years old, showing about just what they call YOLO trades. They put their whole account into one stock or one call option and either having huge returns or just devastating losses. But the forum has grown, and now it's actually quite a force. In fact, as you see right here, there are 2.4 million what they're calling degenerates, meaning followers of this forum. And when Citron decided they were going to short GME, these guys said, all right, that's a big short position. Let's screw the guy. Let's buy the stock and push it up because there's less supply. And that's what they did. And they shot this stock up. Let me go in here. From $20 when they all combined forces and sort of pumped this stock from $20 to $40 in just about a day and a half. Well, that's when things really started getting interesting. You see, the owner of Citron Research then posted this to Twitter, saying tomorrow he's going to do a live stream, explain his case, explain why I didn't like it at 40. It's definitely going back to 20. And here's the line that got him. He said, buyers at these levels are the suckers at this poker game, in which someone made a pretty funny comment about him. However, as you can imagine, our degenerates over at WallStreetBets didn't take kindly to this, and then they all decided to go all in. They all piled their money, bought this stock up, and if he thought it was bad at 40, they shot it to $160. That's right, a stock that was $17 was now at $160. It's up more than 1,500% over the last 6 months. Now, this is what's known as a short squeeze. This is what happened with Tesla last year, if you watched that video. But the idea is fairly simple. If you short a stock, you're betting on it to go down. So instead of buying a stock low and trying to sell it high, you borrow it from a broker when you don't own it, you sell it, and your goal is to buy it back at a lower price, capture that profit, and then return the share to the broker you borrowed it from. Well, there's a borrowing rate with shorting stock. Because you don't own it, you got to borrow up somebody who does, and normally that's 3, 4, maybe 5%. But when stocks become heavily shorted, and the short interest, meaning the percentage of the shares gets up to 20, 30, 40%, that rate goes up. At its peak, the short interest on GME was 150%. That's right. People had held more shares short of this stock than even existed. So the borrow rate went through the roof. You see this report here from a guy online reporting that Interactive Brokers, Schwab, and a lot of others were not only raising their requirements, completely eliminating margin on GME, meaning they were not letting people go short this thing. And then this commenter said Fidelity, a regular investor, Fidelity offered him 10.5% just to loan out his share, let them borrow his shares to short them. So you've got a crazy short squeeze going on. And when this thing continued to rocket higher, remember our guy at Citron was going to do a live stream and make his case. Well, that got postponed because the boys over at WallStreetBets then hacked his Twitter account, then sent him threatening messages to the point he made a big public announcement, which was this letter. What they've experienced in the past 48 hours is nothing short of shameful and a sad commentary on the state of the investment community. We will no longer be commenting on GameStop because, quote, the angry mob who owns this stock has spent the past 48 hours committing multiple crimes I'll turn over to the FBI, including harassment, et cetera, et cetera, et cetera. He even put a video in there where the guy just basically whining about this. And to summarize it, This Wall Street fat cat cannot fathom that a bunch of kids with Robinhood accounts who know nothing, according to him, have bested him, and this guy has lost billions of dollars because of it. So, classic short squeeze, and maybe I've got a sick sense of humor, but to me, it's a funny story. And it's always, even if someone's losing money, it is refreshing to see regular, everyday retail investors get the best of Wall Street. And we're seeing this happen more and more and more. Folks, this is not the same market it was 12 months ago. This is not your daddy's stock market. What worked before does not work today. If you're trying to buy stocks with low PE ratios and low price to book and traditional value fundamentals that we've all watched time and time again, you're going to underperform in the market, if not lose money. You know, our insider strategy is really not all that different than what's going on over at WallStreetBets. I'll give you, it's a lot more legal. It's a far more above board. But what we're doing is we're tracking the CEO, the CFO, the board of directors, the people in the know. We're seeing when they're buying the stock in their own account with their own money because they've got access to better information than you and I. Well, what's happening over here on this Reddit forum is these people all gathering their money together, deciding what they're going to do, pumping a stock. Again, legality is questionable. I'm not endorsing it. But they know that, hey, we're all about to buy this stock with tens of millions of dollars. They know it's going to go up, so they get in with inside information and profit on the rise higher. So if you're looking for a more legal route to do that, click the link below. I've got a full training video on my Insider Report service that shows the ins and outs of the strategy, how I do it, how I pick stocks, the signals that have returned the best. And I'll show you step by step what I do that has allowed us to outperform the market and hand members gains as high as 1,091%. So go ahead, click that link right now, watch that video. And if you have some free time, take a look at this website. You'll get a kick out of it. Reddit.com/r/WallStreetBets. There's some guys in there making insane trades and both losing all their money and making small fortunes.